Good morning, everyone, and welcome to the 130th episode of the Veritas Fact Finding Series. And this morning, I'm joined by my longtime friend, John Clark. Good morning, John.
Good morning. It's great to be here.
We're back again live to go on the ground to speak to industry professionals in an unscripted, candid video format to discover how we can make better investment decisions. If you're watching and you like what you hear, follow us, give us a like, www.veritascorp.com. Quick disclaimer, this broadcast is not to be taken as investment advice, and participants and/or employees of the Veritas Group of companies may own securities discussed in this broadcast. And while we love all our guests, and John in particular, this session may contain forward-looking statements, investment opinions, and comments that we don't agree with. But I'm going to tell you in advance, that's going to be very highly unlikely. Now, I want to just tell you a very tiny bit about John. John may well be one of the most humblest and grounded individuals I've ever met in this industry. And I've known him pretty much since I started Veritas back in 2000. We crossed paths. He'd reached out to me and at his hedge fund and became clients of ours, and we started working together. I'm going to let John tell his history, but for those just come up with the big highlights. After graduating from Duke University, he started in the investment industry. He moved to Toronto. He met Jerry Connor and started Connor Clark and Lunn, Connor Clark in '77, and then met Larry Lunn and became Connor Clark and Lunn. After that, and another sale, which I'll let John discuss all the details of, he started J.C. Clark, which was a hedge fund and family type office, and then he got into real estate quite significantly over time, and has been involved actually in golf courses. So a breadth and of experience in very many different avenues. We're going to discuss investing in today's market. We'll discuss ideas, historical opinions, and how that can relate to today. And really try to unpack how, as investors right now, we're grappling with so many new things, I'd say, and to see how we can manage our client portfolios better. So, John, I want you to start really as far back as you like. I love how your bio talks about your family. Why don't you tell us about yourself and why you got into the business and what it means to you?
I met a girl in 1962 in my being at Duke University, and married her 2 years later. So that was the start of everything that exists today. We have 4 children, 4 married children. We have 12 grandchildren, 10 girls and 2 boys. So it's not an unusual group of people. But age now moving into and they're in university and some still in high school and things like that. But a very happy family. We're very lucky to have them all doing what they're doing, and we're terribly proud of them.
So,
sorry.
No, go ahead. Were you going to say something else?
No, that's fine.
Okay, so I'm gonna bet in advance this. I think I didn't ask you, but you haven't done this sort of interview before, correct?
No, I haven't.
So, take us through how you got into the industry and what attracted you to the investment industry, what attracted you to Jerry and Larry and so on.
Okay, when I was in high school, I worked hard at selling anything. From newspapers to all the things that a young person might do. And by the time I was in university, I was attracted by what happened at investment companies. I wasn't involved in any type of revolved people down there that were doing that. But when I came out, I worked with my family for 2 years immediately after getting out. And then in 1967, I think you quoted it, 67.
Yeah.
67 was the year that I started with the first of my two. Baker Weeks was the second one. The first one was not, it was the family of, I've forgotten the name of the people, but it was an very interesting experience in that I came out for the first round for 6 years. During that period of time, I'd had no experience in the investment business, but it always seemed that the way they were handling things didn't work. And at the end of the 6th year, I ended up going to Baker Weeks, which was, again, another New York. Francis I. DuPont was the first one. Baker Weeks was the second one. So
these were investment firms?
Investment firms.
So you're working as an analyst in these investment firms?
I was in sales for
Sales. Okay.
sales for both of them, and did well. Loved it. Had great luck as the first Francis I. DuPont. It had its problems, which led to me leaving, and eventually ended up being out of the business. But acquired the what was left of the company was acquired by one of the different people in Wall Street. Not impressive, but Baker Weeks, on the other hand, continued on for 6 years for us, and then announced that they were merging with a third party. And by this time, I had been working with Jerry Connor, who had been a summer student from Chicago, who was going back to take his MBA. And during that period of time, I said to him, if you will stay, I'll ensure that you get trained by Baker Weeks in New York. And he said, oh, he hadn't really thought that through. At any rate, when things came along, he went off to New York, and we carried on with Baker Weeks as a small part of its operation globally, but quite significant in Toronto. And after we did it for 6 years, we said it's time for us to go out on our own. I'd been doing this for 12 years, so help me with the math.
So now it's 1977.
1977, and we start something called Connor Clark. And during the period of time that Connor Clark was going, Jerry Connor was the man that ran the place. I mentioned that I was the chairman, and in all things in my life, I was always the chairman because I didn't want to work. And I was specifically terrific at not working. But we really created something. Then in 1982, we started Connor Clark and Lunn. I had worked with Larry Lunn, who was working for one of my clients in British Columbia, Sam Bellsberg. And so a rather sad story, but we said to Sam's that we were starting Connor Clark and Lunn, and we would allow him, or like to have him as a partner, and he could come in with a 25% interest. And he did not like that idea at all. Fired Larry Lunn, and ended the involvement that we had in with the family. And we had taken $4 million and turned it into $32 million during the period of time that we'd worked for them, but we got booted out the door.
And so the company that Larry Lunn was working at fired you as the investment manager. And
Yep.
they fired you because you wanted to take Larry to work with you?
Yes.
And did Larry agree to come?
Yes, yeah, well, no
So
problem.
I want to just back up because as an entrepreneur, and I know pretty much all those on the call are all entrepreneurs. You made a big step, where you had been working for 12 years. You identified your future partner probably pretty early in Jerry. You said, this is a guy who can manage money. I can probably work with him. And so what made you what was the tipping point that said, okay, now's the time to start Connor Clark, and what was gonna be unique about your firm versus what was it on offer at the time?
Well, it was, thanks, you're asking all the right questions. Um, Baker Weeks was really something. Um, and I think the treatment that we had by the manager for Baker Weeks in Toronto was exceptional. He did everything he possibly could to move us up the ladder. And when we came to leave, he called in all our clients and said, "Go with it."
Wow.
So no, really and truly a very wonderful experience. But Jerry Connor was the kind of guy that worked. He would arrive in the office at 9:30 in the morning, and he would go home at 7 at night, whereas I would be in the office at 8 in the morning, having worked out at the Cambridge Club, and I'd be gone by 4 in the afternoon because I go home with the kids, the four
Yes.
that we had. So it all worked out very well. He initially was very, very I would say his skills were almost like an auditor, and he applied this also to the way he approached the investment business. So he added tremendously to what Connor Clark and was, um, and he enjoyed it immensely. He left 1 year before to start Cumberland,
Yep.
which has been a big success. We sold when he left. I lasted for 1 year, not having Jerry around, and it couldn't be done. So the Royal Bank bought Connor Clark and Company, and as I was describing, was one of the most unusual things that ever happened to me in my life. Connor Clark did not put non competes in the takeover, and virtually all of our people from Connor Clark ended up building their own companies. I think now it would probably be somewhere around 12 to 14 million, 12 to 14 um, um,
Billion.
yeah, right, billion on that has happily been established. And obviously carrying that on to where it really was. I didn't speak of starting Connor Clark and Lunn at the time, or we covered it, but didn't realize how that would evolve into something that in Canada is unmatched. $140 billion for clients managed. I think 116 different offerings that they have that cover different requests that people have as to what they might be doing with their equity investments or their debt investments or whatever else it was. And today, really, it's because of Jerry Connor and Larry Lunn, who trained a group of young people who now run the whole thing. There are 8 8 countries that they're involved in. There are 80 employees, and we mentioned what the value was they were covering.
So then you started J.C. Clark, which was basically your family office, ran like a hedge fund, but you had also outside clients as well, right?
Yep, yes, that's true, and that lasted through 2014. And there were other adventures that I undertook during that period of time. But um, uh, Stuart, um, when we were talking to what the future would be, I had indicated to one of the older people, older, he wasn't old, but he had started out in his 20s
Yeah,
with, and
Colin
he
Stewart. He's a great guy.
Colin Stewart.
I know him. Yeah.
Yeah. So at any rate, he did that and has continued with that. And I think it probably is my knowing young people that are involved in it. He's unmatched in terms of the people.
So I know you've been involved also in real estate, and you also started an interesting firm called CommonWealth, which did processing for hedge funds, which you also sold. And then you're also involved in a couple of golf courses, the Pulpit and Paintbrush with Prem. I wonder if, if we could just hear from you. What does it take to be an entrepreneur? And because you've been a serial entrepreneur and you're still an entrepreneur now. I know you're involved in so many things that we can't list here, but
Yeah,
what does it take, and why do you do that?
good question. I would say this, that the first thing that I did as a kid, or anybody any other part of my life, I never ever wanted to work for somebody else, and I probably would not have been popular for people if I were working
But
for people.
why? The question is, why didn't you want to work for somebody else?
Because I was enjoying independence and coming up with some silly ideas. Don't forget, I didn't like working, but I could have an idea. And I was the one thing that I would turn to Colin Stewart and say, here's something, give it a shot, go for it. And he'd work his ears off doing that. And it was fun. He enjoyed it. I enjoyed it. And it was one more example of being an entrepreneur. Um, Now, the compensation was pretty good, so you can't that part of it. But I don't that doesn't really turn my crank all that much.
You don't get into anything and say, "Oh, I'm going to do this because it's going to make me a lot of money." Is that fair to say?
It's totally true.
So what's the first thing that makes you take that first step?
An opportunity, you see something that isn't being done, and you in my case would take one or two of the young people and say, this is stupid, let's go get them. Meanwhile, I would go to sleep or go back to Mystique and take the winter off, and life was good. So, and then the other thing is, the one thing that I did with any of the organizations that I created, they loved it to death when I didn't show up. Or Ann and I traveled to one of our places that we had. I knew that they were skilled. I knew that I didn't have any examples of people taking
But
advantage
the
of
thing is,
me.
the thing is trying to deal with compensation, because if you're not going to be around, you're going to have to compensate these people to make sure that they stay happy working, right? Because that's always a challenge we have as entrepreneurs.
Yeah, and they all did well. I mean, when we sold out the pulpit, or it's not the pulpit, sold out Connor Clark,
Common? Yep.
Clark. These people all owned equity, and the price of the sale was $130 million when the Royal Bank bought it. So they didn't suffer.
All right, let's dig into where we are in the investment world today and the things that we're faced with. We have obviously the Trump tariffs. We have concerns about inflation. We have concerns about interest rates because they're not coming down the way perhaps we would think of. Canada's been shit on. What tell us your thoughts on what's happening and how you'd position portfolios.
Yeah, I would say I don't for heaven's sakes, um, don't scramble what you're doing. Clean up if you have any concerns on what it is that you have been doing, but don't abandon everything. That's not going to work going forward. Um,
What does that mean? Don't abandon everything. Sorry.
Well, the idea would be that somebody panics and sells all their stocks or whatever, or blames everything on the people that are actually looking after their funds. I think that one of the real reasons that Connor Clark and Lunn is where it is they offered so many different things through so many um, periods of time when at least two or three of the new offerings that they had helped people move either part of their what they had been doing or transfer what they were doing to that area, and it has definitely worked. Now, will it work forever? I'm not sure, but I don't think that the to put a stamp on it. Certainly in Canada, I don't think that we're going to be washed out. Well, if we go to the situation in the United States, no, I have no knowing as to how it will happen, how it will be straightened, but it is a mess.
And so, what do you think? What would you do? It is a mess. Uh, but does this mean, is this the end of the U.S.? Is this a time, because we're starting to hear talk globally that that the dominance of the U.S. is come to an end. People are saying don't invest in the U.S. anymore. What are your thoughts there?
Well, I understand all of those things, but this situation, I cannot. I grew up spending four of my best years of my life being in the U.S. and probably would have stayed there were it not for the war, were it not for Vietnam, because even though I was a Canadian, were I to stay in North Carolina, I would have been drafted.
Mhm.
So I came home to go. I did have thoughts about going to law school, which was part of what I trained on, but that didn't go anywhere. So
Got it. So you're not sure how this is going to play out in the U.S., but you wouldn't abandon investments in the U.S.
I wouldn't have. Well, don't forget. That then maybe I'm talking as a Canadian that there will be certain things that you can count on that are good assets and will continue to be good assets. You probably will suffer the pricing on them for a period of time, but there are a number of different operations that uh, will be happening um, for 30 or 40 more years. So these are important things to think about.
Can we unpack some of those? What you think those are?
I really can't. I mean, I don't, if you look at what my own personal items are today, I'm long some interesting thing, not really interesting, gold. I'm long uh, the Siri, which nobody except Warren Buffett and I are the only ones I think that are investing in this thing. And then a good portion of my own investments are in puts that I use for really my real hit for this period of time has saved what I've been doing. My the account that I have, the only account that I have, is 7.8% to the good, and it's been as high as 10 to the good. So
But
that's
so you're buying puts on some of these big tech names. Is that fair to say?
yes, yeah,
And so you're concerned that some of the big run up in the U.S. is kind of getting frothy.
yes, yeah,
So I know we've talked about the Nvidias of the world and so
yeah,
on.
yeah.
And so you would share that view. If anybody has any questions, we are live, so feel free to type something into the chat box, and I'll try to get John to answer. I know that you've invested also in real estate and so forth, and that land. Any comments on that, especially given the current economic outlook here that we have in Canada?
Well, I can tell you what does work for you. Don't borrow money. It's fine to have cash, but I did a development 21 years ago in Caledon. Um, it was I called it to the what was the name of the stupid thing? Um, oh, the ranches of Caledon East. The ranches of Caledon East. They were 9 different pieces of property that went from 10 to 14 in the size. And I set up what you were allowed to do and what you could go about doing. And I did all the putting in of the pavement and everything else that was involved in it. And I sold 6 of these properties in 6 months and thought this was terrific. I'm going to now found something that's going to work. I had 3 that I had not sold that I sold 10 years later. So I learned that there were it wasn't too good to expect that everything is going to go the way that you want it to go, and you better not owe anybody anything when you're doing that, because you're going to have problems. If you don't, if your money that you're sitting there for 10 years, that's okay. Fast forward to my experience in Canawan. 5 of us bought Canawan and Mestique, Mestique. 5 of us bought it because they originally said that there were 10 that were going to join, and like everything in life, they don't do it. So there were 5 of us that we did it. The houses were um, there are 100 houses in Mestique. Average price was 400,000. Today, the people have carried on after I left as I was the chairman once again, didn't want to work, chairman of Mystique, and the valuation of the 100 places went from 400,000 per place to 20 million per place. So it does work out, but it took a long time.
I think, but I think the key takeaway there is you can't the debt causes you to make decisions when you don't want to,
Absolutely correct.
because I
You
think,
either you don't want to, or you're dead.
yeah, and so, and that's why I think, you know, that I don't recommend margin, because it's the same sort of thing. We're good at picking directionally where things are going to go, but picking the timing of when it's going to happen is really tough. John, I want to dig in just a little bit. You know, there's a huge movement to passive, and everybody here on the call, obviously, we're all active managers. You've been active management your whole life in so many different ways. Um, any advice on that and where you think that's going to go going forward?
Well, I don't. I think that I think if Connor Clark and Lunn is a model for anything, there will be more models like that. Actually, I saw one on TV this morning when I was watching the market on the opening, and it was a little twin of Connor Clark and Lunn, what they were doing, and I think that that's going to be a very real probability that comes up.
So where you mean you have to have some passive, some active, is that what you mean?
Yes.
And cater to what clients want, basically.
Yep. Yep. Yep.
Right on. We had a client, we have someone asking here from Edmonton. David, good to hear from you. Are all the puts on specific tech names, or are you shorting just ETFs on the tech names or anything else?
No, I use only the puts directly on whatever the company is.
Okay. Um, and so lots of time you've spent in this industry, some 60 odd years. And one thing people don't know is you've run how many marathons, John?
40.
40 marathons. This is a man who's driven. He doesn't, that's one of the things, right? You said you see opportunities, and it's amazing you say you don't like to work, but it's not that you don't work. You don't get out of bed in the morning and run a marathon. You don't get out of bed in the morning and run, you know, billion-dollar investment firms without working. But if you were to give people advice today, getting into the industry, what sort of advice would you give them?
Well, I would say that again, they should look at what's going on in the industry and look at who's working, what is working in the industry, and that should cover them the way to go along. I mean, I can't imagine that you know the types of opportunities that are being offered by the banks and whatnot, and it's not the right thing for what people should be doing. I don't think it's boring, basically, and without you having the independence that you can have when you're working with one of the Connor Clark and Lunn's type of operations.
So you're saying you would recommend doing something on your own, or thinking about ways you could do
Or
something on your
you
own?
can do that, but that usually, you know, here is a guy that spent 12 years working for or with different companies,
Yes.
and I you know I guess I survived that. The first one I wouldn't have survived at all. The second one I probably could have survived that for a long time, but came along in the right opportunity, and Jerry Connor and John Clark started Connor Clark.
Maybe I'll be trying to delve into this a little bit more, but what about, like, would you know, just the standard route is they study commerce, they study finance, they do their CFA, and they want to get in the business. Is that what you think the key way
Well,
to do it?
yeah, it's interesting. I heard one of the leaders of one of the U.S. I didn't get what his ranking was. I suspect he was the president of the university, and he was saying, unlike my situation, I was a history major when I went to as I was working at Duke, and he made specific mention that there's nobody taking history as a major in any of the university. It's all, there's some technical, that worked out 20 years ago that they're now trying to move into that area, which I understand how it happens, but don't think it's right.
You would rather, you would advise them to study the history, to
Yeah,
study some of the more liberal arts, open the mind so that you can actually start to think differently.
yeah, I think so.
Firmly agree. Um, if you, our investment industry generally, what do you think the future looks like for us? Fees going down. Everybody's doing it themselves. Everybody's buying passive. You know what I mean? Active management.
But you answered your own question. Behind that, I can answer our own questions. The reason people are doing it by themselves is it's been a bull market for 76 years. So that's why it's happening. They forgot the fact that there are actually people that should be able to add value to what they have. If they're that good, and they can only buy winners and sell losers, they could come work with me. But that isn't the case. So I think the big danger is chasing it up and chasing it down, chasing it up on the way up and chasing it down on the way down. So if you can't do those things, you have to have some understanding of why people are doing that type of thing.
Yeah, I think, look, from what I see, speaking to clients, retail, institutional, I think there's no better time to be in the active management, because I don't think that the next 10 years are going to be as easy, quote unquote, as it has been over the previous 10 years. Would you agree with that?
When I joined Francis I. DuPont, well, let me put it this way. In 1929, the graduating class of Yale, 80% went to Wall Street. When I came to where I went for my first, the number of people from Yale that year going to Wall Street was 0.
That was 1962
Yep.
from Duke, right?
Yep. From Duke. I mean, I didn't know anybody that was going to. That's where I went when I graduated, after spending 2 years with the family.
You know what's interesting is, a part of being an entrepreneur is when everybody's walking this way, you look this way first and say, where the hell is why is everybody going? What's over there, right?
Well, I think that's you're telling my secrets now. I'm gonna have to say I'm not gonna answer that.
That's okay. All right. So I always like to leave our guests with a couple of key things to pass on, and one is your favorite book or books that you want to advise.
Okay. The Only Woman in the Room by Marie Benedict. Hedy Lamarr invents something to deflect German torpedoes during World War II. A Gentleman in Moscow by Amor Tolls.
Oh, yeah.
Russian aristocrat is under house arrest at Hotel Metropole in Moscow. All the Light We Cannot See by Anthony Dear. Blind French Girl and German Boy Meet in Occupied France. Actually, I think that's the best. And when I was 6 years old, my favorite was Paddle to the Sea.
Paddle to the Sea?
Paddle to the Sea. Oh, it's a great book. Great book. Bacon and Eggs plus toast.
I didn't ask you the question yet.
Yeah, but I know that I know what's coming.
Yeah, yeah. So your favorite breakfast? You're a
Bacon and
classic guy,
eggs.
just bacon and eggs.
Yeah, right. And Ray's Bakery in Alton is my one of my favorite places to go, and not surprisingly, Pulpit Club for eats. I'm very proud of what we have there, so that's another one.
I
That's
love it.
two. And we don't forget we've lived in Caledon full time, 35 years. So
So you've mastered the work from home. You figured it out. Remote working long before COVID, right?
I actually I take credit for one thing with Prem Watsa. He doesn't go in on Fridays usually. And that started because I didn't go in on Fridays. And he thought that was a good idea. And his place is not that far away from me. So together we did that. I also, during the years that I continued to work in Toronto, but we lived there, I had a driver for 30 years that took me in every morning and out every night.
And that was good too, because that while you were driving, you were still working, you're thinking about things, you're
Phones, you could do a zillion things. It was really quiet. I left at 6 in the morning. Got there at 6:45. Now those days are gone, but that's pretty magic.
amazing. Listen, I want to give a special shout out to Anne, of course, who helped with all the technology and helping us get this all to work, and
Yes.
to all your great family that supported you. And thank you, John. Stay healthy. When's the last marathon you ran? When was that?
2015.
Yeah, 10 years ago. No
10,
plan to run. No,
10
go ahead.
No, 10 years ago, we're long past that. We just returned from the Caribbean, and instead of running, we go walking for 3 kilometers each, no, every other morning, and it takes an hour. So that's where I am right now, and happy to be doing it. That's
I think 85, right, John? Is that right?
I'll be 85 in a month. I'm 85.
Congratulations. So the last marathon was at 75,
Yep.
which is amazing.
Yeah.
All right, John, continued health, and thanks for all your time today. All the best to you.
Thank you. Bye for now.
Bye-bye.